Alrighty, ladies, welcome to the moment you've all been waiting for. I know so many of you guys have been just so incredibly excited for this call, and I just feel so blessed to have met Angie and the team that I work with at Harquin Bookkeeping because they have completely changed my life, and I've been working with them for a couple months now, and you guys, knowledge is power. I've been in, I've had my own business now for 5 years and an entrepreneur. I've been filing taxes with a CPA and doing all of the things. And gosh, you guys, I have learned so much more in the last 2 months than I have in the last 5 years. And so I really, with talking to Angie a couple calls ago with her, I kind of just broke down to her and I was like, I really wish that I would have had you guys at the beginning. I really wish I would have known what I know now. I wish I would have been a better advocate for myself in this independent business. I wish all these things, right? And it really got me thinking, if I don't know it, the odds of most of my team knowing it is probably pretty darn slim. And I feel I would be doing you guys a disservice without at least giving you the opportunity to talk to a specialist and to ask questions and to have this opportunity. And this is really unique, you guys. Other teams are not doing this kind of stuff. So with that being said, Angie and her team have been helping me, but you guys, in no way, shape, or form am I saying, hey, you should do this specific thing either. But we want to give you this knowledge. And if you feel like you want to, that is on you, but that is not what this, like, I don't want you guys to think this is a sales pitch for her. She is very passionate about what she does. She's very good. She's extremely educated. She's been doing it for years. You guys, she is works from home and has children and is in our boat. And that's why I think we get along so well. And she's open and she's honest. And I love, love, love that. So I'm so excited to finally introduce Angie and to shut up, because I know you guys did not come here to learn shit about taxes from me, because you know I have no information to give you. So without further ado, Angie, you are totally on, girlfriend, and I will watch the chat for questions. So you go.
Okay, well, thank you, Erica. That was a very generous introduction, especially for the week I've had. I just texted Erica a minute ago because I'm not winning any awards for technical things or anything like that this week. Probably never, but so a couple of things I'll let you know from the start. I'm a CPA. I've been in tax practice was pretty much my whole growing up in my career. Spent some time with the big firms and then had my own practice and was a CFO at our we have a pretty big church around here. And then my son got sick and I needed more flexibility. And now I'm working for myself through Harquin and get to meet great people like Erica and you guys. So I asked Erica when she asked me to talk to you guys to come up with kind of like your top 10, because I know, especially this time of year, taxes, deductions, write-offs, all that is probably more in our minds than it normally would be throughout the year. I know in June, I'm not thinking about this stuff. Can you guys hear me okay? I'm kind of in a big room. Okay, all right. So I'm just gonna go down the list. And after we're done, the gal that puts together all of our marketing and helps me get my PowerPoints and all that, she's actually out of town and won't be back for a few days. And I'm much better inclined to sit with my 10 key and a bank statement than I am to work with PowerPoint or anything pretty. So in a couple days, I will get something over to Erica and she can shoot it out to you to kind of give you a prettier version of what we're going to cover tonight. So the first question was, what can I write off? And I thought, well, that's a big question. Really, there are a couple words that get tossed around and they essentially, some of them mean the same thing to somebody like me and some of them mean something different. So a write-off, a deduction, and an expense, those are all things that you can you can write off or reduce your income by. So things like office supplies, rent expense, what are some of the other ones? Internet, software costs, those things. Tax prep fees, you can write those off. Bookkeeping fees, all of that. Then another word gets tossed around, and that's credit. Can I take credit for that on my taxes? Most people mean that as a deduction or an expense. You get $100 in income, you have expenses of 50, you have net income of $50. A credit in my world is a dollar for dollar. Just think about getting a credit if you return something to the store. It's a dollar for dollar reduction on what you owe in taxes. So while all of that means essentially the same thing, to me, sometimes credit means, oh, I have a tax liability of $100. I have a credit of $100. So now I don't owe any tax. So now that I've totally bored you with that, so some of the questions on what can I write off, some of them were like giveaways, clothes, internet, phone, daycare, free shipping, and all of that. So yes, except for daycare. Daycare is going to be one of those expenses that's considered personal from a business standpoint. Now you can write off, deduct child care expenses on your tax return on another form, but we won't go through. Right now, all I'm talking about is your business income, business expenses, business net income. So that's kind of, in general, ordinary expenses and necessary expenses for your business, or what the IRS is going to let you take. So that's kind of the high level filter. Is it ordinary? Are people in your industry spending money on these types of things in order to run your business? And is it necessary? So that's the high level filter. And then you kind of whittle down into your categories from there. And I had gosh, do I dare try to share a screen? If you go to irs.gov and in the search box type Schedule C 1040, I'm going to try it. Maybe I better not. Okay, I better not. I'm not. I'll just show my age and among other things here. So it'll show you some of the categories that the IRS gives you specific line items to handle. So some of them: rent, advertising, marketing, like I said before, rent expense, office supplies. And then there's this big category, the last line item, called other. And that's going to be anything else that isn't already stated on the other lines there that are part of your business plan. Gosh, this is really strange doing it without any feedback. Anyway, so that was your first question. And so then the next one kind of relates to that. The next question that I got was, how can I write off the Zaya gear that I want purchase to wear as marketing and advertising? So this is one we have to be a little bit careful about. Like, I wouldn't say go buy your whole wardrobe and write off the whole thing. But if you have certain pieces that you use and you want to take them out and call them personal use or advertising, call them advertising. Personal use things aren't going to be business expenses. But if there's something special, take that out of your inventory, call it marketing expense. A lot of times, sometimes we'll get questions from boutique owners and other retail folks that have their nails done, have their hair done, all that for a photo shoot. Again, it would be kind of the same thing. Don't get, I wouldn't write off every time you go, but if there are a couple specific times, then I would let, if I were preparing your tax return, I would sign it with that expense on there. Let's see here. Okay. Do I need to keep receipts, and can I keep digital receipts? And the answer is yes. Yes to both of those questions. So you do need to keep receipts in this digital world that we're in. And in fact, I even print things here at home. I print them to PDF. If I buy something online, order toner, I print and I save it in a file, in my receipts file that is no longer a shoebox, but it's, on my computer. So definitely need to save as many receipts as you can. Just in case you're audited, you want to have as much substantiation for those expenses. see here. And Erica, if I forget something or whatever, you can jump on here and let me know. Let's see.
You're doing great.
Oh, thank you. Thank you. Okay. Another question was my information. Oh, what tax breaks should I be looking for? Well, again, tax breaks, that's a big category. So you really want to be working with your accountant, your CPA. There are some good tax provisions out there right now for the 2020 year, like the qualified business income deduction. It takes 20%, gives you a deduction of 20% of your net income right off the bat. So that's something, QBI is what we refer to it as. So if you're taking notes, make sure you ask your person, do I qualify for the QBI deduction? Because that's a big one and it gets missed quite a bit. The other thing, as far as tax breaks, you're going to want to track your mileage. So a lot of vehicle expenses come up and questions come up, and I'm not going to get into the weeds. And if you have specific questions on whether you should go buy a $65,000 SUV, I would probably tell you no, but
Come on.
I know, we all want one. But you definitely want to track your miles. You definitely want to track your miles. So I use an app, and this is not an affiliated thing. It's called Mile IQ. I think it's $60 a year. It runs in the background. And then when you're bored, you can go, you swipe left for business and right for personal or something like that. And the IRS has approved that as your mileage log. So then at the end of the year, you know what the business percent of your personal vehicle you used. And then you take that percentage against all of your, gas, maintenance, car washes, all that good stuff. I'm trying to think, losing my train of thought here. And I'm trying to think another one. Oh, home office. Do you guys, if you have a home office where you do your administrative work, if it's a separate area of your home, chances are you can write off the square footage of your home and the utilities and things that are related to your home office. I kind of think that with the nature of how we are existing in the world today, that maybe you won't have to have it be a totally separate area. They used to not want you to have a desk in your bedroom and call that your home office. But I look for those restrictions to kind of be a little less, possibly, because we're all working from home. If you rent a space and you have an office space there, probably wouldn't be a good idea to also take home office expense. Just the IRS isn't gonna like that from a ordinary and necessary expense way. Another good question was, do you need to be registered as a small business to write things off? And kind of in relation to that is when do you become an LLC or actually formalize your business? So these, in my mind, go together. I think anytime you're operating a business and you want it to be a business and not a hobby, you should register with the Secretary of State's office in whatever state you are, kind of legitimize it from that standpoint. There's probably going to be a small fee involved, and then get your bank account set up, keep things separate from your personal, and then just treat it as if it is a business and not a hobby. And that's kind of the difference I think of in my mind is if you're running a business and you have a hard year like we've had, you're not supposed to write off hobby losses. But if you're running a legitimate business, you can deduct those losses. So I just wanted to encourage you to take the leap if you haven't already and become an LLC. You don't have to file an extra return. If it's just you can file a Schedule C, like a sole proprietorship, within your business or within your tax return. So it doesn't overcomplicate things. It just gives you a little more I don't know, it just feels better. Is that a good way to, I don't know. You're catching me. My alarm went off for my bedtime at 8:30 because I'm in Eastern and I get up at 4. So,
Real quick, Angie,
yeah.
just to elaborate on that, because I feel like that was a big learning curve in my business in this last year. And so, just to make sure, I want to recap what you said. So like registering your business and like legitimizing it, right? Like that. So
Right.
if you live in the state of Florida, go to Florida Secretary of State and register that. That is one step, correct?
Mhm.
But then there's
Correct.
a second step that would you becoming an LLC, which is like a separate entity, basically.
Right,
Right?
right. Well,
Okay.
it depends on each state, but most states, I'm in Ohio, and most states are set up where you have options. That when you, if you're just operating and you haven't gone to the Secretary of State's website, you're a sole proprietor, and you don't have some of those some legal protections that a limited liability company or LLC would provide. When you register with the Secretary of State, you pick what form you're going to operate in. LLC is one form. So LLC, corporation, nonprofit corporation, those are all the options that you'll have. Foreign or domestic, just if you encounter those, just means, are you domestic in that state that you're registering in, or are you a foreign like, are you registering in Delaware, but you don't reside, your business isn't going to reside in Delaware. You'd be a foreign corporation in Delaware. So
Okay.
all of, and right.
Yeah. So at what point, because I feel, so just to give you some overview, we have a lot of girls that this is a hobby for them. They're maybe making 500 or maybe a couple thousand. And then there's some girls that are probably making 10, 15, 20, 30,000 a month. So there's really kind of like two very different ends of the spectrum. And so I want to help both of them with this question, because you've helped me so much with it. So at what point, maybe it's a dollar amount per year, would you suggest
Oh,
somebody
yes.
really formalizing an LLC and becoming an S corp or a
Right. Yes, you're
what?
right. An S corp.
Yep. So
Yeah.
because it is a better place to be at some income level, correct?
Right.
Okay.
Correct.
Can you
So
touch on that?
I sure can. As long as everybody's still awake, because I know this is not an easy conversation to have at this hour. So when you're an LLC, you're taxed as if you're self-employed. You're a single member LLC. You file a Schedule C in your tax return, and you're self-employed. And if you have a job where you've gotten a paycheck and you look at your paycheck and you look at all the minuses, you have federal income tax withholding, and then you have a minus for Medicare, and you have a minus for Social Security tax. The employer is matching those minuses except for the income tax piece. Social Security and Medicare tax, when you're self-employed, is 15.3% of every dollar of net income that comes through your business. So you make $100,000 of net income, $15,300 is self-employment tax, gone. You're always going to pay income tax. So let's say you're in the 25% income tax bracket, and then you add self-employment tax on top of that, 25, 35, 40, 40.3% is your overall marginal rate of tax. So one planning idea is to make an election. It's a tax election. You don't file this with the state. Is to call yourself a subchapter S corporation or an S corporation. And all that does is give you the ability to say, I'm now an employee of my company, and I'm going to take payroll of 50,000, and I'm only going to pay Social Security and Medicare, that 15.3%, on the 50,000 I took as payroll. The other 50 I take as a draw, or whatever, you leave it in the company, whatever you want to do, but you only pay income tax on that piece. Income tax on both, but only the 15.3% is on the wage piece. And I usually recommend you make that switch when your net income is between 60 and 80,000. because to you, cash is cash. You don't want to just take cash and pay me versus paying the IRS. And I'm saying me, I mean your tax professional, not me. But at that sweet spot is when the cash out overcomes the cost of the added administrative fees. So you're going to have a separate tax return from your personal return. You'll have an S corporation return, and you're going to have to run payroll. And those both have administrative costs. So I don't really see the cost benefit until you hit that type of net income level. So that was a long-winded.
No, you're fine. We appreciate it. So is that just Zaya business? So say you have another full-time job or another gig. Is that you would just say just Zaya or just any 1099?
Right. Any 1099, any source of income outside of what your regular wage income. And I saw something pop up. It is, I say 60 to 80,000 a year. And it's not a magic number other than I try to look at the total cost benefit. You want to save the taxes, but you're going to have extra costs, and it doesn't seem to break even until you get around that threshold. Does that make sense?
Mm-hmm.
Okay.
Yeah, thank you. I just wanted to make sure we broke that down. I think there's a lot of girls that are either in that range right now, or they definitely will be this year. And I think so in order to have 2021 as an LLC, because you have to start the LLC before you can have the S Corp, correct?
Right. Okay. You can't be a sole proprietor.
So what's the cutoff in order to do that for 2021? If any of these girls are like, well, let me see how the first couple months go. And maybe they make really good money in the first couple months and they're like, okay, I should probably switch. What's the cutoff? Right. They have to have it done.
Well, the good news is there's actually two. So the first one would be March 15th. So the IRS says if you want to be an S Corp for all of 2021, you have to submit the paperwork by March 15th of 2021 to have it count for the whole year. Now, there was a provision back in 2013 or 2009, I can't remember, that allows for late S Corp elections. So you could, if you had the LLC, already set up, you could at December 31st say, oh my gosh, I totally forgot. I didn't file the paperwork in March like I was supposed to. And we file late elections a lot. And in my 28 years of doing this, I haven't seen any of them denied. So as long as you operate as if you are, it's a pretty clean sweep to do that.
Yeah, and that would mean you'd have to be an LLC for the year.
Right, you'd have to be an LLC. Yeah.
And then also making sure that and these are things I learned, but I want to clarify, you have a separate business, separate credit, debit card, separate checking account. All the financial side of things need to be completely separate. Your Zaya paycheck going into that business account, like everything needs to be like, it's almost like it doesn't belong to you. Okay.
Whether you're an S Corp or LLC, if you're running anything outside of personal income, you're going to want to have that separate. You're going to have to file for a tax ID if you haven't already. And that you do through the IRS to get some people call it an FEIN or Federal Employment Identification Number, tax ID, all those things. So but yeah, the more you can separate business from personal, the better.
Awesome. I hope that makes sense, ladies. You can register to be an LLC at any point during your established Zaya biz if you want to legitimize it. Sorry, answering a question. But the S Corp is where the tax break comes in. That's where the 60 to 80 is going to make a difference. Right. Okay, just clarifying that because that's big deal.
Yeah, you hit it right on the head. And you can register as an LLC anytime, and that doesn't affect when you have to have it in place to make the S election, but you don't have to do the S election just because you have the LLC. Okay, were there any other questions? Do you want me to keep going? I don't know how much time, or I don't want to encroach on your business meeting too.
No, you're fine. So I think some people are confused on what kind of tax break you'd get to be an S corp, and I feel like it's a pretty loaded question, to be honest.
Yeah.
And I still, you guys, Angie has told me this like 15 times. I still am confused, and I'd be confused if she says it again. However, she told me the difference of how much I would have saved. Okay, that's when it made sense. So I feel like if you are going to make 60 to 80, this is my I am not a licensed CPA, but just do it because it's going to benefit you, right?
Yeah.
So,
well, and the difference is that, do you want to pay 40% of every dollar of income that you take out, or do you want to pay 15% on half of it? Do you want to shelter part of that income from Social Security and Medicare? And I think Erica had even mentioned to you that you're going to save that tax, but you're also reporting less earnings to the Social Security Administration. So take that cash and open an IRA, open a Roth, invest it somehow so that you're not just saving it and spending it, but you want to, I mean, I would recommend you do something with some of that savings. You have a plan.
Awesome. At what point do you feel like someone in a business like this should go from filing through like a TurboTax or like more of a free or a cheaper option, we'll call it, and really decide to get a CPA, a bookkeeper, an accountant, and kind of go that route? Because that was always unclear to me in this type of a business. I felt like, oh, I'm not big enough, and oh, that's a lot of money. But what I've realized is they actually save you a lot more money. Can you kind of just touch on what your thoughts are there?
Yeah, well, we try to. So my thoughts are, TurboTax and all that, they have their place if you have a W-2 and a mortgage, and there isn't a whole lot going on. But the minute you start having a business or having additional write-offs, I think that complexity, just from having the liability support by a professional, if you're audited, or to say, hey, did you check the box to have the QBI calculation within the software? TurboTax, I've used it. I used to use it a lot. But you can make TurboTax do what you want and think it should do just by checking some boxes, and it may not be the right way. And I also learned that from experience. So, and in my area here in Columbus, you can go to H&R Block or Liberty Tax or one of the shopping mall, preparers, and actually pay more than if you come to, Josh's firm or something like that. And that's what really surprised me. I thought we have to be more expensive, but it's usually based on the amount of time it takes and not necessarily paying by a fee for each form. So as long as your books are in order and your stuff is pretty organized, it really, spending $500 to $700 to make sure you get everything you should. And you also get to write that off as a deduction for next year. In my opinion, it just is a win-win. And then like I said, you have that support. You get a notice, you send it over to the person who did your return, and they respond to it. And so that's kind of my 2 cents on that. Sometimes it's not as scary as you think.
Awesome. Did we miss some questions on that top 10 list? I feel like you've been doing really great at answering all of our.
I combined a couple. I think the last one, because you covered the TurboTax one. I guess there is one on how much do you have to claim, and that's you really have to claim all of it. There are a lot of people that talk about, well, don't, if it's under $600, you don't have to do anything. That really isn't true. The IRS would say you're supposed to report everything, no matter where it comes from or whether you get a 1099. So that's that. You have to report it all, but let's make sure we're capturing all your expenses. And that goes into the last one on how to track expenses. You could do it as easy as a spreadsheet. Maybe you download your bank statement into an Excel file and you sort things by staples, Office Max, utilities, and all of that. But doing QuickBooks or some form of QuickBooks, whether it's the Schedule C version or the self-employed version, that really helps. You balance your checkbook, you can put your credit card charges in, it's all in one spot, and it makes it really clean and easy for the end of the year.
Awesome. A lot of people are asking just to maybe talk a little bit more about, and I know you know this, and Shelby, gosh, we should have pulled her in, my bookkeeper.
Oh yeah.
Because she's really good at this, but we can kind of, maybe you and I can spitball some of these, but they want to talk more about advertising deductions and write-offs because in our business, it's, legit, your body is selling your product. Okay. So I'm going to run through some of the things that are in our business, and then you can say yes right off, or you're crazy, Erica. Okay. A paid for Zoom account.
Yes.
A social media posting app, like a Post My Party. Okay.
Yes.
Ads on Facebook.
Yes.
Okay. I bought a bunch of little gifts to put in my customer bags for freebies.
Yes, giveaways.
Perfect.
All day long.
Yep. I bought hangers to hang up my Zaya in my office on my racks.
Yes, I would say deduct your hangers, office expenses.
Yep. Okay. My 12 ring lights.
Oh, yes. Can you see I have one. Can you see them in my glasses?
Yeah.
Oh my gosh. I'm blind with contacts.
Yes. Clothes I buy to do sizing, style, fit guides for my customers, for my Instagram followers, all of that.
Yes, I would say
all
definitely
my samples that I buy, because we get new releases every Wednesday, everything that I buy, and I try on, make videos, posts, reviews. Okay. Did you guys hear that? Okay. Don't ask any more questions on that. Okay. Let's see. I'm trying to think of other things. This sign that I had made for my office.
That's office decor.
Perfect. Okay. Anything in this beautiful space. Somebody said thank you cards for your customers.
Yes. Yes.
Okay.
I have them right here.
Love it.
I'm extracting them right here.
Yes. Okay. A gym membership.
Ooh, that's a good one.
Because it's
related to your business and your industry, I would say absolutely. I would normally say no, or maybe a portion.
I was going to fight with you about it anyway, so it's fine. I was going to sell it.
In your industry, ordinary and necessary. That's what I'm going with in my filter.
Okay. Did you guys hear that? When you're making decisions on if it's a write-off, is it necessary? Is it right? Okay. So think about these things. Okay. Cell phone and internet bills. I work from home. This bitch is tied to me.
Yes.
Okay.
Now
done.
that is one I would say take a percentage of. Kind of in your mind, think of what your business use percentage is, because everybody knows nobody has a landline. Well, I still have a landline, but most people don't have landlines anymore. So you're using it for personal. So I would just not be, don't be there used to be an old saying, which I won't be able to remember now, but 80-20, 90-10, something like that.
Awesome. I buy a new phone. I mean, you guys, these things, like, it all goes, I think the biggest thing that I've learned is like not to overthink it. And if I'm buying it because it's going to help me in my business and make me more successful and things easier in your business, it makes sense, right?
Yeah. I saw one question pop up about, do I need to have a certain amount of income to write off expenses? And the answer is no. If you are, you might even have pre-opening costs where you're getting ready to launch, you're getting ready to open, you're getting ready to start. So you're getting everything set up. You're buying your samples, you're buying your product, but you haven't really sold anything yet. So you might have an instance where you don't have income, but you have expenses. So keep that in mind.
Yep. Okay. Oh shoot. Okay. So when you start as a new rep, you have to pay a starter kit
Mhm.
fee to get into the business. That's a write-off, right?
Right.
Okay. There was one more question that I really wanted, or one more thing that I wanted to make sure you guys know. Shoot. Laptops.
Yes. Yeah, I was going to say computers, printers, tracking devices. I don't know if you guys have Apple Watches or Garmin's or things like that. You could write those off if you're doing it, if you have it to help keep you, with your appointments and track your steps and all that stuff. I wouldn't say that to the normal person that would come in and ask that question. But
Yeah.
I mean, you guys are normal, but you're in an industry where that expense is normal.
Mm-hmm. Yeah. And I think just reiterating, if there's something that you use for your business,
Yeah.
bada bing, bada boom, baby. I'm trying to think of anything else. You guys, is there anything else you're questioning if you should write off? I see a lot of people saying that your accountant has told you differently or whatever. And you guys, this is why I decided to up my game and hire a bookkeeper, a CPA, and an accountant. Those are 3 different people because I felt like I was getting all these different answers. And it was because the person didn't understand my type of business. And when I came to Harquin, they understood boutique style businesses, they understood MLMs, they understand what we do. And that's very different because my accountant that I fired when I hired these guys, and again, this is not a sales pitch, I'm just speaking from my heart because I wish I would have hired them earlier, is that he was not in, like, you have to be your own advocate. He didn't tell me any of this. He told me I couldn't write off all these things. And so it was a big switch for me. And it was because he didn't understand my business. It's not that he was a bad accountant. He was black and white and he didn't understand this type of a business. We are the first MLM like this, you guys. This is different. Okay.
Well, and those relationships with your current providers are huge. And what we've always said is even within our office, we might all have a different level of comfort, on a return. And so you might ask 10 CPAs and get 9 different answers. But really honing in on what is ordinary and necessary in your business, in your industry. It's not like me as a CPA wanting to write off my gym membership. Yeah, I don't have one, you can tell. But
stop.
But anyway, so there are some nuances, and black and white is okay for some people, and I'm okay with some gray, but I never want to sit across the table from an IRS agent and have to look at you and them and say, yeah, I knew we really shouldn't have done that. So
I love that. And I think that that's very true. And it is important just to find somebody that makes sense with your business, because they are going to be your advocate if you ever sit across with the IRS person. So you got to do what they're comfortable with. Okay. Shipping costs, ladies. Yes, that's definitely, gift cards. So I think a lot of people are confused on how to write off gift cards. So if I go purchase a gift card in my Zaya back office, and I'm going to be using it for giveaways and for client promos, what would I write that off as?
Giveaway or marketing or something like that. And just whenever you're taking notes on what you spent and you see that maybe it's a $50 or gift card to Starbucks or something, just write in there gift card for giveaway, so that it, a year from now when you're like, what was that? Or if your CPA wants to know whether was that a meals expense that you're only going to get half a deduction for? No, it was a giveaway. I get to write off the whole amount.
What about we often do like a percentage off, so like a kickback to a customer. Would you just do that under a giveaway, or which category would you write that off as?
Well, by discounting the income coming in, you already have that.
No,
So, or is it a separate line item?
Yeah, so we would be, so say they bought $100 worth of merchandise and we wanted to give them 10% off, I would PayPal, Venmo, $10.
Oh yeah. So when you see that, refund go out to them or that discount go out to them, that becomes a deduction for you called a discount. So you can have an expense account right in your cost of goods sold called discounts.
Okay.
Discounts and promotions or something like
Yeah,
that.
I think we write it under promos. Okay. And then should we be keeping customer promos and team promos separate? Or is that
I would, and not that I want to overcomplicate your accounting life, but things you do for your team, I just like to keep that separate from a knowledge standpoint, not necessarily a tax standpoint. I like to know what's my cost to get my customers and what am I doing to benefit my team. So I have kind of like a personnel cost versus a customer cost. So it's more of a, for tax purposes, you can write them both off, but for operational purposes and looking at reports and making decisions, that might be a metric I would separate.
okay? Next question. So what percentage should we be saving from our own commission to maybe like put aside for taxes? And when should we be paying quarterly taxes on our Zaya income versus just yearly taxes?
Oh, that nice surprise that comes in April. So I always recommend it. Okay. You guys have low overhead from what I understand. So you don't have you're not paying a huge staff. You're not out renting big facilities and things like that. You have your revenue and then you have your, ancillary costs, but you have very low overhead. So I would really recommend, this is going to sound like a big, scary number, but you really need to think about realistically 30 to 50%, depending on your personal tax bracket, needs to go in a tax savings account. A good place to start would be 15%. But remember that 15%, if you have income, you're already 0.3% behind on Social Security and Medicare. So does that shock everybody on how much that is? I have very low overhead in my practice. I put 50% in savings and I pay myself 50%. And then at the end of the year, if I have some left over, I give myself a bonus and I fund my IRA. But I think a safe level would be start at 15, but you're probably going to be closer to 30 or higher. So,
and again, like I feel like that is a sticker shock to a lot of people, Angie, but if Zaya pulled our taxes for us already, there would be no sticker shock unless you looked at that. So I feel like it's just us having to actually like do it, which kind of sucks, but
yeah,
because we're getting paid, but it was never our money to begin with because we all do still owe the tax man.
Withholding is a big shield for a lot of people. They don't realize you're looking at what hits your bank account, but if you stop and look at the amount of tax that is paid when you're an employee from that standpoint, I used to say there would be a revolt if people had to pay in all their taxes with a check. I'm not going to say that anymore. I didn't say that here, but yeah, it's a lot. It's a lot. So right off the bat, 15.3% for if you're going to make income, if you're going to make net income, 15.3%. And then I usually calculate, I don't know what state you're in, all of you. Florida, no state income tax, but federal, maybe like 20 to 25%. In Ohio, we have a 3%-ish state tax, and then we have local taxes on top of that, income taxes. So, so for me, I'm more in that 35-ish% rate.
At what point in our business, or maybe there isn't a point, maybe you just have a suggestion, when should we pay quarterly taxes or yearly?
So the IRS says anytime you think you're going to owe in next year in April when you're filing for, well, I guess it's this year, in April when you're filing for 2020, if you owe more than $1,000, the IRS really wants you to pay in that $1,000 in quarters. They want you to pay as you go. So you really have to kind of look at last year. You can use last year as a guide. You can use 2019 for 2020, and you can use 2020 as your guide for 2021. But the minute you have net income after your expenses, you really need to be thinking, do I need to pay in $250 first quarter, second quarter, third quarter? But you really have to know your tax situation. I don't think there's really a magic number other than that $1,000 at the end of the year, but you just have to plan for that as you go.
But it's not a bad thing if we did throw the IRS a $500 check every quarter, just to make sure that you're not
right
getting blindsided.
Yeah, so there's two thought processes. Throw that $500 at the IRS, or you can throw it in a tax savings account so that you have it and then you turn it over. What would happen if you owe more than that on your self-employment income or on your tax return is they would calculate a little bit of interest. They'll say, well, you owed $1,000 and you didn't pay anything in first quarter and you paid in second, third, and fourth quarter. So you're going to owe a little interest in that first quarter. So it's whether you want to throw the dog a bone or yeah. So just two options there. But yes, you can send in a 1040 ES anytime you want.
1040 ES. Somebody want to throw that in the chat?
Yeah, and I'll include all this with the stuff that I'll get from Stephanie.
So
I haven't seen them send a check back yet.
So if there is somebody who is doing, who is being their own great bookkeeper, or maybe they just have a bookkeeper, would you suggest that they save? You mentioned 15.3% into a tax savings account. Let's use that number. I know some of you guys are asking about the 50%, but that was what she suggested as like a safety net. But the 15.3, would you suggest that they do save that 15.3 of their gross income or net?
Of your net.
Okay. Does that answer your guys' questions?
If you're going to do it on, some people do it on gross, but I would lower those percentages a little bit. So maybe look, give yourself, what percentage of my gross do I usually have in expenses? You could do an estimate that way, or just lower your percentage, maybe only put 12% away if you're calculating it on your gross income.
Is there a particular actual tax savings account, or do we just, it's a savings account, we label it that?
Yeah, just nickname it or label it your tax savings account. I'm a Dave Ramsey girl. I don't know if any of you have heard of him before, but trying the debt snowball and all that. There's another guy out there, Mike, and I cannot pronounce his name. I won't even attempt to, but he wrote a book called Profit First. And he has you open 5 bank accounts, and one of them is a tax savings account. And that's another way to jumpstart, trying to think of, what's coming up in operating expenses, and taking every dollar and kind of giving it an assigned place in your, in your pile of cash. So.
Awesome.
It's a good book. If you have small children and you get Audible, I recommend headphones because he does cuss a little bit. So
these ladies deal with me. It's fine.
Well, I have teenagers, so I'm living the dream. My youngest is 16, so it's not like I'm sheltering anybody anymore over here. But
yeah, right. What is that called again?
It's called Profit First by Mike. Oh, you know what? That? With this is not an endorsement, but I do have it here because this is what it looks like.
Yeah, that's a heck of a last name.
Yeah, McAllowitz, I think. But
Becky, log into your back office. You can change it there. Okay. So another question, and then we'll probably hop off soon. I want to respect your time, but at what point does it count as a loss in somebody's business?
Just when you have more expenses than you do income, then you'll generate what we call as a net operating loss. And then you can offset other income on your tax return by that loss. So let's say you have a part-time job and in your W-2 and you have a loss in your Schedule C, in your ZIAP, what we don't want, but for this year, maybe you had a loss. So your W-2 income can be offset or reduced by that loss from your Schedule C.
Awesome. Any other questions, ladies? I want to respect her time. I feel like we covered a lot. Sounds like a lot of you have some work to do.
Well,
I see a lot of the same questions coming up, ladies. Just don't overthink it. Again, if it makes sense.
And you know what, you can always put it down, always write it down and include it, and then sit down and go over it with somebody from time to time and get it a little more organized, and, you know, the yeses and the nos, and put them in, you know, in different columns. So, but yeah, I think I really appreciate everybody's listening to this sorry topic tonight.
Riveting.
Sorry, yeah, riveting.
Well, we
you,
learned.
Erica.
Yeah, we all have read a book called Get Over Your Damn Self. And if you're on this call and you still haven't, where have you been, girlfriend? We've been talking about it for like damn near a year. But we talk about 4 reasons people fail. And one of the reasons is they don't treat their business like a business. And so here we are. We're all treating our business like a business, and we're leveling up. And so I appreciate you, Angie, coming on so much and bringing this knowledge here to us. And we know knowledge doesn't come free, and we appreciate you so much. So,
Well, thank
ladies,
you all.
yeah,
Happy
unmute
New
your
Year.
mics and give her some love.
Aw.
Thank you, Angie. Appreciate it.
Aw,
Thank you so
thank
much.
you.
Thank you, guys.
Thank you.
Yeah.
All right.
Thank you.
Stay well,
Thank
everybody.
you.